Boom, guys. Boom. We just nailed it. Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, I'm going to go over the bounce on the Bitcoin chart as well as the stock market, even though we do see a sea of red, as of course the industry is suppressed after the just disastrous Black Swan event that we had with the FTX and Binance war, where Binance essentially has gutted FTX, but not at the fault at Binance, at the fault of FTX, who was using their own customers' money to leverage in potentially illegal ways, and really did just entail a lot of greed and deception. And those guys could be in a lot of trouble. Our hearts go out to the people who lost money to FTX. I'm not sure how or if it's possible to be made whole, but obviously that story is continuing, and it is also continuing to suppress the market. One of the big winners, though, is Matic, as it is taking advantage of the relative gains, I believe, against Solana, essentially, where you do see Solana being one of those FTX Alameda coins just taking a pretty big hit. So we'll see how long Matic can basically use that momentum. But guys, let's go ahead and see why, today could have been a bullish day, right? And it in fact was, because the CPI data actually came in with, good inflation numbers. I mean, look, the expectation was 0.6 increase in inflation, but it was only 0.4. So it stayed flat, right? The core CPI was expected to be 0.5, right? The last measurement was 0.6, and it was 0.3 actually that it came in. So that's much better than expected. And then we have, of course, the 12-month previous was 8.2. Expectation was 7.9, and it beat it by at 7.7. So guys, like this inflation is starting to be fought, and the markets are seeing that as a good indication that the Fed just won't be as aggressive as it otherwise could have been. And we were having some debate about this in my friends group, where I said, guys, you have to remember, like, these things happen, and it's the same principle. Everyone was super bearish in the summer also about inflation, but then we had the summer rally, we had a bull run almost. And so, guys, you have to be open-minded to both ways. You can't be a perma bear, and you can't be a perma bull either. You should just be a clever little alpha monkey. Every day is a new trading day, guys, and it's important to have a thesis for both up and down. You need to set your conditions for both up and down, and then you have to know what the validation of those conditions are so that you can actually get in the market, right? So you have to have the conditions, you have to know the setup, then you have to have validations of the conditions. They have to be met, right? And then you actually have to get in the market. And then you have confirmations where, of course, you can see if your thesis holds up or not. And you don't touch it until you have your antithesis, right? Until the opposite of what you think is going to happen, until you have, something that's going to negate your trade. And that would be your risk management, right? That would be your stop loss. That would be your planned exit strategy. So you need to have all of those things: conditions, validations, confirmations, and then, of course, risk management and then exit strategy. So, guys, let's go ahead and, just for truth in advertising, let's pop over to the previous episode and see what I had to say about where I thought this would go. Remember, we hadn't yet really crossed under that $18,000 threshold yet. We were around 17,700, and I gave you a projection of where I thought that the price action would be going, right? And so what are we looking at? We violate this level, then I think we're going to a 16,000. Boom, guys. Boom. We absolutely nailed that one. Let's go ahead and just skip a little bit further along in the video where I showed you the alpha origin channels, right? I showed you the alpha origin channels and where I thought, based upon, this kind of proprietary system that I made myself out of my own imagination here, where I thought that we were going to get a bounce based upon the hard work that I've been putting into these alpha origin channels, which really have been saving our butt ever since the top of the market, every single step down, giving us the warnings and giving us the bounce points. Listen to what I had to say. This was just last episode before that final leg down in the crash. In fact, it's right on track to be headed to that level, which would be 15,500. So, what did you get that? Just based upon my momentum strategy and support and resistance, I was targeting 16,000 using my system that I've been developing for the alpha momentum pools and the alpha momentum scale, and then my diagonals and my horizontals, and then for the alpha origin channels, we pinpoint precisely to the dollar, got 15,500 as the number to get. And just jumping over to the charts, we can see what was the bottom of this descent. 15,500. Boom, guys. Boom. Just congratulations, Alpha Fam, if you were part of that trade. Congratulations if you took any of the 3 short setups that we had back here. And in fact, the alpha momentum pools have just been killing it, right? This was an ambiguous one. This was a long off the top of that. This was a long off the top of that. This was just ambiguous inside of the alpha momentum pool. This was a break and a close under, which was a shorting opportunity. This was a break and a close under, which was a shorting opportunity. It actually gave you a second chance. And then look, this one also was a break and a close under the alpha momentum pool. So all of these were shorting opportunities, or at least your chance to be warned not to go long, right? And so what are we seeing today? Well, guys, a boom, like we absolutely nailed, right? That 16,000 to 15,500 level that we were talking about. And if I can just precisely gauge it, it was actually $15,523 on Coinbase, which was the bottom there. And so I did update the momentum pools in order to give you an idea of what we have going on today. And you can see that we are moving up in the alpha momentum pool. So if this was an ocean, I don't even know what to call this. This was just, we dropped. Essentially, we dropped to hell, guys, but Bitcoin is making a noble attempt to get back up here. And so I have updated the alpha momentum scale over here so that you guys can have my custom-made signals. And these are only valid for the day, so these are gonna expire at the close of the day. But they do tend to remain a similar day to day. And so if we do end up breaking 15,900, it's not just that we will have made a lower low here, guys, okay? This is using a calculation of momentum. We will have lost all of our momentum. All of this momentum that we're generating right here, we're going to have lost all of our momentum of this system, right? Up all the way, from the 15-minute all the way to the weekly, at least, if not more. At this number at a 15,900, and that would suggest that probably we're going to visit that $14,000 range that I was talking to you about before, perhaps even lower. But we can talk about that if we do break out of my momentum pool. For the day, I'm perfectly satisfied with the last episode that I made, where we nailed 15,500, we nailed 16,000. You can see these candle closes right here, they're directly at 16,000. So 16,000 and 15,500, boom, boom, guys, like we absolutely got that. And then, of course, the chart is regulating itself. There is, of course, a mean reversion happening. This is quite a bullish engulfing candle. And while I am on the 12-hour right now, just so that you can get a little bit of perspective, each one of these candles is worth 12 hours. This one isn't closed yet, so it's only partially. You can see that we are defeating my solid bearish bias here, which is anything under 17,540. And what was this that I was pointing out last night at 9 p.m., guys, when we were down here, somebody in the groups was asking me, what do they think about their shorting opportunity? And, I had to tell them, I said, I'm analyzing it. And to me, it looks like 15,500 was the local bottom. And so be careful. We can literally pump up to 17,500 to retest our breakdown of the previous range. And so, guys, boom, 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 like all three of those calls, the candle close, the wick down, and then also the pop up to this 17,500 area where we're actually pushing into 18,000. These have just been spot on. The Alpha Fam is just killing it. It was one of our friends in my good friend Crypto Retta's group, the AR. And so shout out to the AR fam for so much engagement and intellectual conversation about these markets as well. You guys are absolutely killing it as well, and just shout out to the Alpha Fam and also the AR Fam. We are just killing it, guys. Super strong. All right, like great job, and again, guys, like these markets are unpredictable sometimes. There's a lot of risk involved, so please, 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 please make sure that you are not using more money than you can afford to lose. Please make sure that you're spreading your risk around on multiple exchanges. And if you're not actively using certain monies for trading, then please keep your money on a ledger, keep your coins on a ledger for your hodl positions. Understand that you may have to hodl for a couple years. Like if you're investing, I don't personally invest in this stuff. I think it's super risky, very Ponzi, very questionable people involved. Um, I don't trust much of crypto Twitter. I don't trust much of crypto YouTube. I don't trust most of those groups. There's just these gurus with their big old egos, and they think they can tell you 100x or 1000x and they just get people wrecked, guys. So please, please, please do your risk management. Know your stop losses and your exit strategies. Understand how much you can lose before you get into the game. Use small amounts of money. Don't use more than like $100 to be trading until you're winning more than 60% of the time. And please never use more money than you can afford to lose, guys. Okay? Like you can use more money when you're a better trader. But if you're losing too often, if it hurts you when you lose, it means you used too much money. Don't be a gambler. Okay, guys? Just please practice safety in trading. All right? But I did want to deliver these updated, alpha momentum scales over here. And so, guys, I am going to have a, solid bullish bias if we do climb back up to 19,945. And had I delivered this video earlier, you guys probably wouldn't have believed me that we could climb back up like this, okay? Like, just like people didn't want to believe that we could go lower. People were making fun of me. They were like, no way we're gonna violate this. It's time to turn around, all of that stuff. And guys, I've had these lower targets for a long time, and I still have lower targets because I tell you guys, don't be a perma bear, don't be a perma bull. You have to have a strategy for both directions, up and down. And the important thing is, okay, it's not about making calls. That's for idiots, okay? Only idiots make calls. What I want to see, I call them calls just for shorthand, but what I want to see is conditions being met, validating the conditions, and then getting a confirmation so that we know that we can just let it ride, and then also knowing where those confirmations get invalidated so that we can have an exit strategy, a stop loss, know when to, fold our cards, right? Or take our profit. And so, guys, again, let's just go over this really quick. There is a front runnable number around 19,400 in my mind, where I do think bullishness will have come back to the market. I do think the market gets neutral around 18,790. I kind of just throw that in there because sometimes there's a big spread between bearish and bullish, but take it with a grain of salt. My bearishness really does start around 18,500. So technically we are still in a bear zone for me. This could all just be a retest. What would it be retesting? Essentially, it would be retesting the bottom of this range, okay? So let me go ahead and just make this a little bit darker so that you can see it. And you can see we would essentially be, this was previously our support, and the market just may want to be bouncing up here and retesting it as resistance. So you can see that's why my momentum pool is such a long space, because we had such a dramatic drop, right? A catastrophic drop in the market, that this momentum trail, essentially the pool is so deep and we have to swim all the way up above this level and break up into the next support level. So there is structure, there is support and resistance behind this theory, even though I'm using momentum calculations just to put my own unique perspective on the market and to add something to this industry, because I don't want to just copy what everybody else is doing with their support and resistance. I could we could all just go to anybody's channel and just copy support and resistance. What I'm doing is adding value by adding these momentum calculations of 4 different types of momentum over 5 different time frames in order to generate this scale for you, in order to ensure that we have these reliable momentum pools. And other guys may be adding other things like they may do in-depth EMA analysis. They may do in-depth Fib analysis, right? Fibonacci's. They may do Fib circles. They may do all sorts of things, right? But some guys do diagonals, and some guys do whatever else. But what I'm offering here is I do have my origin channels, and then I also have of course, my momentum pools and momentum scale. And I hope that you appreciate it. I hope this is helping you guys. If we looked at this momentum pool here, you can see that we're essentially consolidating. We're neither bullish nor are we critically bearish. We haven't drowned in the pool, and we are not like sitting up by the side of the pool just relaxing with a drink, catching some sunlight, getting some vitamin D, okay? Like, you want to be on top of the pool, sitting next to the pool, like having a good time, right? But you don't want to be at the very bottom of the pool, struggling for a gasp of breath, and you don't want to be buried underneath the pool, right? Like, you're already dead if that happened. But guys, the 2 to 5 day projection remains the same. We can see this level up here, approximately 20,009. It's actually 910-ish. Let me double check. Yeah, it's 20,910 is the number that we're going to have to beat in order to get the 2 to 5 day projection bullish. Okay, guys, so that does go in line with my uber bullishness for, just in general. Like, if we're able to conquer the solidly bullish, then I will be uber bullish, having taken out not only the dailies, but also the 2 to 5 day projection. And I think the 5 day projection is a pretty good one, because it's very close to the weekly, right? It's very close to the weekly, and so it can get a little bit of that front running, right? Whereas sometimes you're a little bit left behind in the market because you're doing weekly analysis, monthly analysis, or daily analysis. For me, the 5 day gives us a little bit of a head start. Okay, it's a good compromise place in my opinion. Some guys use the 3 day for a similar type of purpose. Let's go ahead and just double check our volatility, while we're here. And you can see that we have pretty much maxed out on the 12-hour in terms of what was pushing us to the downside. So this thing is going to turn around, and it's going to start a new kind of epoch on the 12-hour. Let's go ahead and look at the daily. The daily also is getting kind of topped out, right? It looks like the push to the downside is coming to a close. We do need to wait for this volatility EMA to catch up with the volatility itself. And then when they pinch shut, then we'll know that the push to the downside is over. This does suggest that there could be a surprise for us, right? Like, we don't know. And then the 2 day is just starting to get going. And so we don't know yet if this is going to implement itself fully in the downward direction, because it was over 10% while we were pushing down. There is the likelihood, okay? There is a higher probable likelihood that we could push to the downside further. Okay, I just want to make that clear. That 14K level, right? That 12K level, that 10K level, it's not off of the table yet. But for the time being, right? The 12-hour and the 4-hour, right? And the 3-hour, all of these guys are going into massive consolidation, and so they are telling us, well, we pushed so far down, we need to kind of chill out a little while, and that's why you're seeing this nice bounce, right? Even though the daily isn't fully decided yet what it's going to do, and the 2-day is still threatening us basically with a knife to our neck. You can see that the 5-day is also a bit indecisive, and the weekly is actually contracting, but the weekly was going down while contracting, and this is just too big of a time frame for me to really rationally analyze. But you understand that we are losing our momentum, on the weekly, and so that would have to turn around, big time. And then the monthly is softening, and that is a good sign, but we're just not there yet. And sometimes you can have, like, this is like double blue, right? This is double blue. Like, we could have another red one. So just understand, this thing doesn't look done yet, right? This thing has to pinch close all of these EMAs on the momentum. They have to pinch close before we have a solid turnaround, right? You can see, this area right here where it finally turns blue, and we're just not there yet, okay? But we are getting a little bit of rounding, just like we got over here in the previous cycle, and so. There's some good indications that you shouldn't be a perma bear, right? Let's go over to the 4-hour just so we can kind of look at our structure as we have it right now. And mm, yeah, we are kind of struggling just a little bit. You can see all these wicks. We are kind of struggling with this level right here. This wick, these wicks, this wick over here. We're kind of struggling to push above that. And then we're going to have just a whole bunch of resistance if we do get to that $18,600 level. So just understand that if you are long, this may not go forever. And let's drop down to the 1-hour. The 1-hour, to me, it's starting to look like a rising wedge. Okay. So we dropped down from a rising wedge, which is what preceded the actual, fall that we did have. And so, these things aren't to be trifled with. They do have a high hit rate of approximately 70%. And so you can see we're getting very close to the end of that rising wedge, which would actually have a limitation right at that red line that I marked out. And so it's highly unlikely, right? Because there's 70% chance this breaks to the downside. So it's highly unlikely that we're going to just suddenly get up into this bullish area. And I'm just using probabilities because right now, we're in a bearish zone, right? We're in a bearish zone and we have a bearish formation, and that's exactly what preceded our drop over here, where we had this massive rising wedge and it broke down. Now we have this kind of smaller rising wedge on the hourly, right? And so this thing could easily break down to, nearby our oh no levels. Anyways, it can break down into our solidly bearish zone. And then maybe we go for another leg down. Um, but if we get on top of this wedge, just remember, if we get on top of this wedge, we'll actually be meeting the threshold for my bearish-ish, but watch out because we could flip neutral, and then entering that neutral zone, we will be within striking distance of bullishness. So this is how the momentum is playing itself out. I personally wouldn't be in too big of a long position unless we had a couple 4-hour candles above my momentum pool. You could front run it a little bit here, but that's up to you and your risk. And if you just want for like the higher time frames, then that's what the uber bullish is about. So here we are, guys. We've managed to capture a little bit of momentum. And you saw our volatility. It's kind of flipping around, on multiple time scales. Just got to kind of let it chill out for a while, see what it does, and before we'll know if we're going to turn down or continue rising up. It just got burnt out, right? And we also have our price action, right? So price action, momentum, volatility. And let's check out our EMAs just really quickly. On the 1 hour, obviously, we are fairly bullish on this one, but we are bumping our head into the 89, which is often a place where we turn around. We could also pump up to this 200. That's also a common place to get rejected. That would be in line with a lot of our resistance. So there is the possibility of that. Let's go ahead and go to the 4 hour. The 4 hour is kind of setting up a bullish squeeze. This we do have an alpha 9 knockout coming up over here, which could potentially just have a pullback before spring loading it into a bullish position. If it fails the pullback, then we'll know if we violate under the 9. I think we're really operating on this 4 hour time scale and this 1 hour time scale right now. You saw the squeeze play here between the 9 and the 21, and then we just got squeezed all the way up. Well, the 4 hour is now threatening to do the same thing, and that could take us back into bullish territory. But of course, if we go to our daily, we're probably going to look very bearish. We're just kind of retesting the 4 here, which is very bearish. If you're underneath the 4, you can easily have a catastrophic breakdown. Underneath that pink line, the 4, I mean, it's just very easy to break down. So just understand that unless we're over 18,200-ish, on the day, that, maybe even higher than that, 18,300 on the day, then according to these EMAs, they don't feel comfortable, right? They don't feel comfortable yet. But this is the second time that we're pushing up here, okay? So let's go over to the 12 hour. On the 6 hour, you can see on the 6 hour, you can see this is the second time we're pushing up. So that is bullish, okay? It looks like only one attempt, but in fact, this is our second attempt. And so, like, we're really trying. The market is really trying to get this up here. And let's go ahead and go over to the weekly so that we can see what we look like on the weekly. It just looks like a failure on the weekly. It looks like that capitulation where we're underneath of the 300. That's probably the simple moving average. Yeah, I set it up as the simple moving average there. And that is a level that markets do tend to like to bottom around. So the fact that we're actually hitting the 300 simple moving average on the weekly, that's very confluent with bottoms in traditional markets. And you can see that the 300 would have been right here. You can kind of like use your visual, just kind of imagine the trajectory. It would have been right around there. And so this is actually a very beautiful spot to bottom if there's going to be a macro bottom. And I told you guys, like, we have to hold on to this area. We have to hold on to it. This is the area that allows us to have the potential for some potential bullish pattern. Let me go ahead and turn on this bullish pattern that I could possibly see in the market, because sometimes I give you a little bit too much bearish information. But here is the bullish possibility. Well, last cycle we had this accumulation wedge popped up bullishly, which is what happens with an accumulation wedge. This cycle, it looks like we're putting in a falling wedge, right? And a falling wedge. Let's go to the log chart. Might make it easier to see. A falling wedge does tend to break to the upside. It doesn't tend to break to the downside. Now, very frequently on these type of falling wedges, there is a fake out to the downside. So if we still do see some type of wick down to, I mean, guys, it could honestly be as low as 5,000. It's just very possible. But I just want to give you the hopium. I want to give you the strength of resolve that this is a falling wedge, which, just like the rising wedge I was talking about previously, a falling wedge also has a 70% chance of breaking out to the upside, though, because it's opposite of the rising wedge, right? And so this thing could, over, you know, the next half year break to the upside. And so what I'm saying is we're probably very, 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 very close to the bottom. Okay. Yes, we could have a fake out to the downside, but this structure almost never just capitulates down. Okay. Uh, it tends to have a fake out down, and then the market turns around. And so anything underneath this rising wedge, in my opinion, that's all gravy. That's all super amazing buying opportunities. Okay. Sort of like this wick underneath this accumulation wedge, like that was just pure gold, guys, okay? And so if we get a wick below this rising wedge, guys, I'm just going to buy up that wick, okay? Like that's my opinion, not financial advice. And if we do bust out on top of this wedge, then, likely we're going to be looking for an accumulation pattern, or we could even have a V-shaped, breakout. But there is a difference of this wedge and the non-log version. The non-log version is actually even more interesting. Right? We have this kind of a connection here, this point here, this point here, this point here, and then we've actually busted out and have done a perfect retest of the breakout. So, like again, guys, don't be a perma bear, okay? I mean, don't be a perma bull. We're in a bear market, but don't be a perma bear, right? Just be a clever little alpha monkey. See what happens, okay? Just be open-minded, okay? I know stuff is very bearish, and of course we don't want to be moon boys or anything, but just be open to the possibility that this was an interesting moment, okay? Just be open to that. And let's go ahead and go back to the regular chart. We are at 17,777, so lucky sevens over there. And I think I'm going to wrap this one up, guys. It's been long enough. That was your alpha for the day. Here's your, of course, alpha momentum scale just to give you some signals. Let's go back to the 4-hour just so that you can, just to remind you what we're facing here, which is that we are facing a rising wedge, which could break to the downside. We have not gotten over this bearish area. We are not in the neutral area, right? And so the risk still remains to the downside. But for any of you guys in the Alpha fam or the AR fam who did catch the bottom at 15,500, where I was calling it, or was able to capture the candle close right at 16,000, where I was suggesting was likely, then just congrats. You guys are absolutely killing it. You're learning so much. We're all learning so much. I'm learning so much. I'm improving as a trader. That's what this channel is about. It's for continuous learners, lifelong learners. And I think that when the next bull market comes, we are going to just absolutely kill it. Thank you for supporting this channel. Thank you for being subscribers and all of your comments. I really do appreciate you guys. Our hearts go out to anyone who was hurt in the FTX thing. But guys, if you continue to improve, if you just use money that you can afford to lose while you're practicing and learning, then I know we're all going to absolutely just kill it in the next bull run. So take care, guys. That's your alpha for the day. Stay safe and happy trading.